Global Monetary Watch, August 5th. Welcome back, and thank you for joining us for another in-depth discussion on developments surrounding the Iraqi Dinar and the Vietnamese Dong. Over the past 2 days, fresh reports have generated considerable attention across the currency research community. Conversations involving two of the largest banking institutions in the United States have prompted renewed interest, while many mainstream financial outlets have remained largely silent on the topic. Today's discussion is designed to separate documented developments from circulating reports, explain why these conversations have gained momentum, and provide a balanced overview of the facts currently available without speculation or exaggerated claims. Much of the recent attention centers on the names J.P. Morgan and Wells Fargo. These institutions occupy an important position within the global financial system because of their size, international reach, and involvement in a wide range of banking and payment services. When organizations of this scale become associated with discussions involving foreign currencies, researchers naturally pay closer attention. However, it is equally important to understand exactly what has and has not been confirmed. Large financial institutions routinely update systems, review compliance requirements, and improve operational procedures for many reasons. Therefore, every report deserves careful examination before conclusions are drawn. According to discussions circulating within the Iraqi Dinar research community, there have been reports suggesting that both J.P. Morgan and Wells Fargo may be carrying out internal operational preparations related to the processing of Iraqi Dinar and Vietnamese Dong transactions. These reports refer to internal procedures rather than public announcements. At this stage, neither bank has released an official statement confirming a currency revaluation or announcing any change in exchange rates. That distinction is essential because internal banking activities and public policy announcements are two very different matters. Responsible analysis requires recognizing the difference between reported operational activity and officially verified decisions. Even without an official confirmation, many observers believe the reported operational preparations deserve attention because major financial institutions typically devote significant resources only when they anticipate legitimate business needs. Updating compliance systems, reviewing transaction procedures, training personnel, and preparing technical infrastructure all require considerable investment. While these activities alone do not confirm that any currency event is imminent, they illustrate why reports involving large international banks often attract interest from experienced market observers. Operational readiness is a normal part of banking practice, but its significance depends entirely on the broader economic and regulatory context surrounding the currencies involved. To understand why the Iraqi dinar continues to receive attention, it is helpful to look beyond rumors and focus on documented developments that have unfolded over several years. Iraq has been engaged in an extended process of financial and banking reform led by the Central Bank of Iraq. Publicly available information shows continued cooperation with international consulting firms and financial organizations aimed at strengthening the country's banking sector, improving regulatory standards, enhancing anti-money laundering and counterterrorism financing measures, and modernizing financial institutions. These reforms are part of a long-term effort to improve economic stability and integrate Iraq more closely with the international financial system. The broader economic picture also plays a major role in why Iraq remains at the center of these discussions. The country possesses some of the world's largest proven oil reserves, and energy exports continue to generate the overwhelming majority of government revenue. Over recent years, Iraq has also invested in expanding production capacity and strengthening energy infrastructure through partnerships and development projects. These factors have encouraged ongoing debate among economists and market observers regarding the relationship between Iraq's economic fundamentals and its existing exchange rate. While opinions differ on how that relationship should ultimately be reflected, the country's resource base and economic reforms remain documented elements of the conversation. Alongside developments in the energy sector, Iraq has continued pursuing broader financial modernization. Public reports have highlighted efforts to strengthen banking supervision, improve payment systems, increase transparency, and align domestic regulations with internationally recognized financial standards. Discussions surrounding anti-money laundering measures, counter-terrorist financing compliance, and cooperation with global financial organizations have formed part of this long-term reform process. These initiatives are widely viewed as necessary steps for increasing confidence in Iraq's financial system and supporting deeper participation in international commerce, regardless of any future decisions concerning exchange rate policy. Attention has also expanded beyond Iraq to include Vietnam, creating a dual currency discussion that has become increasingly common within research communities. Although the Iraqi Dinar and Vietnamese Dong belong to very different economies, both currencies are frequently analyzed together because they have experienced long periods of tightly managed exchange rate policies while their respective economies have undergone significant structural changes. This shared characteristic has led many analysts to monitor developments in both countries simultaneously, even though there is no official connection between the monetary policies of Iraq and Vietnam. One of the most widely discussed developments involving Vietnam is its recent economic classification by the World Bank. As of July 2026, Vietnam was officially recognized as an upper-middle-income economy based on gross national income per capita measurements. That classification reflects years of industrial expansion, export growth, manufacturing investment, and broader economic development. Despite this milestone, the Vietnamese Dong continues to trade at levels established under Vietnam's long-standing exchange rate management approach. This contrast between economic progress and currency valuation has encouraged researchers to examine how Vietnam's monetary policy may continue evolving in the years ahead. Because of these parallel developments, reports involving both the Iraqi Dinar and Vietnamese Dong have attracted renewed attention whenever major international financial institutions are mentioned. Even so, it is important to distinguish documented facts from assumptions. Iraq's reform efforts, Vietnam's economic reclassification, and discussions within currency research communities are all real and publicly observable developments. However, no official announcement from JP Morgan or Wells Fargo has confirmed an upcoming revaluation of either currency. Maintaining that distinction allows the conversation to remain grounded in verified information while acknowledging that many questions remain unanswered and continue to be closely monitored by researchers around the world. What makes this story particularly important is the distinction between confirmed developments and interpretations built around them. Iraq's ongoing banking reforms are documented through public statements, international consultations, and regulatory initiatives. Vietnam's upgraded World Bank classification is also an established fact. In addition, reports discussing possible operational preparations by major U.S. banks have circulated widely within informed currency research circles. Those reports exist and are being discussed. What has not been publicly confirmed is any specific exchange rate adjustment, any official revaluation timetable, or any public acknowledgement from JP Morgan or Wells Fargo that such an event is approaching. Maintaining that separation between verified information and unverified interpretation is essential for any serious analysis of the current situation. This distinction often becomes blurred when discussions move quickly through online communities. Some observers focus on the existence of the reports themselves, while others mistakenly treat those reports as proof of an official decision. In reality, financial analysis requires a much more disciplined approach. Internal banking procedures, compliance reviews, and transaction processing preparations can occur for many different reasons, including routine operational readiness, regulatory updates, or anticipated increases in legitimate customer activity involving foreign currencies. Without direct confirmation from the institutions involved, such preparations cannot be presented as evidence that a revaluation has been approved or scheduled. They remain part of a developing story that requires continued observation rather than definitive conclusions. Experienced researchers often pay attention to institutional behavior because major financial changes are frequently preceded by quiet administrative and technical work rather than highly publicized announcements. History shows that governments and central banks do not typically provide detailed public countdowns before implementing significant currency adjustments. Operational systems must be capable of handling transactions immediately once a policy decision takes effect, which means that preparation often occurs behind the scenes. This historical pattern is one reason why some analysts consider reports of procedural activity worthy of attention, even while acknowledging that such activity does not establish that a specific monetary event is imminent. The Iraqi dinar discussion has persisted for years largely because multiple long-term developments have gradually converged. Observers continue monitoring the Central Bank of Iraq's reform agenda, the country's efforts to strengthen anti-money laundering compliance, ongoing cooperation with international financial institutions, discussions related to World Trade Organization accession, and broader attempts to modernize Iraq's banking infrastructure. Any one of these developments could be viewed as an isolated administrative process. Taken together, however, they create a broader picture of a country working to strengthen its financial system and increase its integration with international economic institutions. That broader context helps explain why new reports tend to receive significant attention from long-term observers. For individuals following developments involving the Iraqi Dinar or Vietnamese Dong, the most constructive approach is to remain informed, patient, and analytical. The documented reforms in Iraq are real, Vietnam's economic progress is real, and international engagement with both countries is real. At the same time, the timing and nature of any future exchange rate decisions remain uncertain because no official authority has publicly confirmed such actions. Responsible reporting therefore focuses on presenting the available information as clearly as possible, identifying what is documented, acknowledging what remains unverified, and avoiding conclusions that go beyond the evidence currently available. As the current discussion continues to evolve, the central takeaway remains unchanged. Context matters just as much as headlines. Reports involving major financial institutions naturally attract attention, particularly when they concern currencies that have been closely followed for many years. However, responsible analysis requires looking beyond eye-catching claims and examining the broader economic picture. Iraq's banking reforms, its continued engagement with international financial organizations, and Vietnam's economic advancement all represent genuine developments. At the same time, none of these factors alone confirms that an immediate change in exchange rates has been approved or announced. Every new report should therefore be evaluated carefully within the larger framework of verified information. Another important consideration is the role of operational readiness inside large banking institutions. Financial organizations routinely prepare their internal systems to accommodate a wide range of international transactions, regulatory changes, and customer requirements. Such preparations are a normal part of maintaining global banking operations. While reports suggesting additional readiness for Iraqi Dinar and Vietnamese Dong processing have generated discussion among researchers, those reports should not be interpreted as official confirmation of a currency event. Internal procedures and public policy decisions are separate matters, and understanding that distinction helps prevent misunderstandings that often circulate through online discussions. For many long-term followers of the Iraqi Dinar, the current period is viewed through the lens of years of documented reforms rather than a single news report. Iraq has continued implementing financial modernization initiatives, strengthening regulatory oversight, improving banking standards, and expanding cooperation with international institutions. These developments have unfolded gradually over time instead of appearing overnight. Because of this steady progression, every new piece of information is often evaluated alongside the larger reform timeline rather than in isolation. That broader perspective allows observers to better understand why certain reports receive attention, while still recognizing the importance of waiting for official confirmation before drawing conclusions. The Vietnamese Dong also remains part of this broader conversation because Vietnam has demonstrated significant economic growth over an extended period. The country's expanding manufacturing sector, increasing exports, foreign investment, and improved economic standing have all contributed to greater international recognition. Its recent World Bank classification as an upper-middle-income economy reflects measurable economic progress rather than speculation. Even so, Vietnam continues to manage its currency according to its own monetary policies. Like Iraq, any future decisions regarding exchange rate policy ultimately rest with the country's monetary authorities, and no outside commentary can substitute for official announcements. Looking at both currencies together highlights why researchers continue monitoring developments without assuming predetermined outcomes. Iraq and Vietnam are different economies with different policy objectives, yet both have undergone years of structural reform and economic transformation. Their currencies frequently appear in the same discussions because observers believe they represent examples of economies that have changed substantially over time. Even so, Similarities in discussion do not establish any formal connection between the two currencies or indicate that they will follow identical paths. Each country's monetary decisions remain independent and subject to its own domestic and international considerations. As additional information becomes available, the most valuable approach is one based on patience, verification, and careful evaluation of reliable sources. Headlines and social media discussions often move much faster than official announcements, making it essential to distinguish between confirmed developments, reported observations, and personal interpretations. The available evidence confirms that Iraq continues advancing financial reforms, Vietnam has achieved a higher economic classification, and reports involving operational preparations at major U.S. banks are being discussed within currency research communities. What remains unconfirmed are any official announcements establishing a new exchange rate or identifying a specific timeline for either currency. That balanced perspective is ultimately the foundation of today's analysis. Rather than focusing on rumors or assuming outcomes that have not been verified, it is more productive to follow documented reforms, monitor official statements from central banks and financial institutions, and evaluate new information as it becomes available. The global financial landscape continues to evolve, and developments involving Iraq and Vietnam will likely remain subjects of interest for researchers and market observers alike. Until formal announcements are made by the appropriate authorities, careful analysis should remain grounded in facts, transparency, and a clear distinction between confirmed information and ongoing reports. Thank you for spending your time with Global Monetary Watch today. Our goal is to continue bringing you balanced, carefully researched updates that focus on documented developments rather than speculation. If you found this discussion informative, consider subscribing to the channel and enabling notifications so you can stay updated as new information becomes available. We appreciate your continued support, and we'll be back with another detailed analysis as more verified developments emerge. Until next time, thank you for watching Global Monetary Watch, and don't forget to subscribe to the channel and press the bell icon so you never miss a future update.